Vinit Sambre joins us now. 3 months ago, the mood was different. 6 months ago, the mood was different. But 3 months and 6 months from now, what would be the mood? वो काम की बात है. Vinit bhai, good morning. We know what happened 6 months ago. We know what happened 3 months ago. Tell us what will happen 3 months from now, 6 months from now, and 12 months from now. What would be the mood like?
I wish I knew that every day
अरे
is a
आपको
new
नहीं
day.
पता तो और किसको पता है? 90 days. You forgetting.
I can maybe say that 5 years के बाद क्या होगा, I know, but I think it's very difficult to call out 3 months, 6 months. But let me just try to paint some picture. So one, anyways, the most important factor for the markets I consider is the growth in the corporate earnings. And I mean, whichever way you can slice and dice all these macro factors, interest rate, recession, and all that, eventually what boils down and what can justify decent and high valuations for the Indian markets is going to be the corporate earnings growth. And there, I think I would like to stick to my overall thought process. While there has been volatility and uncertainties, but I would say that we are we are going through a slowing kind of earnings phenomenon at the moment. And whatever is happening globally is not helping the cause. Maybe we'll have some of these uncertainties impacting the growth for us as well. And maybe we'll have 1 or 2 more quarters of slow earnings. But my belief is that once we are passing through this next 1 or 2 quarters of slow earnings, we will have created a good low base. That is one important factor, because we have been on a decline for the last 4-5 quarters. And beyond that, I would imagine that whatever is happening in India in terms of the RBI's own initiatives around the liquidity, supporting growth, I think consumers should start doing well with the benefit the people are going to see from the income tax and eventually the pay commission and all that. So I would like to paint slightly better picture, maybe 6 months or 9 months down the line. Hopefully, we'll start seeing revival in the earnings, and that to me is a more better factor for thinking about the durable kind of a rally for the equities market. This small up move which we have seen from the lows in March, though it looks good, but not built on very fundamental thesis at the moment, which really is also clear from the results which are coming out. Management commentaries have not been very great. And maybe relatively India looks okay from all front, but I think that doesn't give it a fundamental support at the moment. So I think that is how I would like to sort of summarize.
When you say the market rally, it's small but aggressive, it's quick but sharp, is not built on fundamental factors. Can you just elaborate a bit more on that?
No, so see, I think what has happened is that through this period of global uncertainty and the Trump tariff, we were sort of at the peak of those uncertainties. And from there, we have seen some kind of changes which US has been calling out, which means that the peak of that Trump tariff pain has been sort of behind. That is number one. Number two, when we are sort of talking to a lot of companies who are trying to sort of build some kind of bullish narrative, I think what is coming out clearly is that, let's say, even if the tariffs were to get implemented, relatively India scores low as compared to some of the other competing countries in various segments for us. And that is actually holding in good stead as far as we are concerned. And then anyways, the change in stance on the liquidity front, the very restrictive regulations by the RBI, those getting sort of normalized. I think those are the narratives which have sort of pulled up. But when I say fundamental factors, I am looking at the earnings and the commentaries which are coming out now. You've seen results by the, let's say, the large FMCG company, the auto company, IT companies. There has been downgrades, and we are still standing with a expectation of 14-15% kind of growth for the current year, which is FY26, where I would believe that as we go through the next 1 or 2 quarters, there could be adjustments which can take place. So what I'm saying is that the fundamentals are not particularly as supportive of what the market has been, but the market has sort of priced this broad narrative which is there.
All right. Hi, Vinit. Good morning. This is Shrishti also joining in. But Vinit, what's the view coming in on the broader end of the market? Because though we have retraced almost 11% from those February lows levels, but it's still below like the September highs. Give us some sense that how do you view this sort of a rebound in the broader end of the market, and do you believe that it's time to go ahead and start looking out for opportunities, or stay cautious and be on sidelines?
So my take on that is that I imagine that there would be continued volatility going through the next 1 or 2 quarters as we go through this global uncertainties, and we'll have these small rallies and some drawdowns as well. And I would really look for these drawdowns to maybe better time some of the opportunities which we are looking at in the small and mid cap space. What we have been doing over the course of last 6 months has been that we were trying to trim businesses where we found the valuations turning expensive, and also the business cycles were looking on the high side. For example, engineering at that point in time and capital goods were seeing very heady valuations, and the cycles were also on the top. So we took that opportunity to sort of trim those exposures, and wherever we believe that the cycles could be changing track. So let's, for example, specialty chemicals as an example, consumer discretionary. We believe that from a low cycle they could change. We have been sort of allocating, and when the markets correct, some of the businesses which becomes absolutely good in terms of relative valuation, we sort of try to look at those, including let's say IT as well, where because of all this global volatility, when we saw correction, we sort of took that as an opportunity to increase exposure out there. So I think that is what we are trying to do, and just sort of trying to avoid the hyper noise which is there at the moment.
Vinit, let's talk about some themes which would benefit because of the tariff change, and some themes and some companies which will lose because of this whole tariff change. When the world shakes, there are gainers and there are losers. The world order is changing. We don't know the speed at which it is changing. But as a fund manager, you'll have to buy businesses which will benefit and avoid businesses which are losing. So let's discuss that point forward.
Yeah, so I think it is very nuanced and I think difficult, but still, like you said, we as fund managers, we are trying to decipher and trying to understand if there could be some sustainable gainers out there. And my belief is that while we are very, very today of the globally faced companies, including, let's say the chemicals or textiles, or for example, auto ancillaries, I would imagine that, here also lies the opportunity, because let's say in reality, if the tariff relatively turns out to be better for our country and globally, I think there is this thought around looking at diversifying your sources. So in that case, I think some of these companies should see some benefit. Beyond that, I would say that there are businesses which have created very strong competitive edge, or I can say that pharmaceutical, for example, we are the lowest cost producer with equal amount of quality. So it's very difficult to displace, Indian, while the rates may go up, but still you will have continuity of businesses. So actually, and the other aspect is that let's say we were interacting with few companies in the apparel and garment space. They are seeing incremental inquiry level going up significantly. So I think all those things are also shaping up while we are going through a lot of these uncertainties, and we are trying to think that if some of these things were to play out, then it could also become big opportunity. So I think that's how sort of we are thinking. But as I said, it's very too early to call out anything because things are very fluid at the moment. Maybe it could get clearer 3 months down the line. But we would like to go with companies which really have some durable advantage and competitive advantages while creating global scale of capacities for themselves.
All right. Vinit, remember that you were quite constructive on the cement sector, and the last time you connected with us, you said that it is a sector proxy of the India's growth story. And given the fact that we have recent Ultratech Cements where they are expecting to clock a double-digit organic volume growth, what's your view coming in now in the cement pack? Are you even more constructive now? And give us a sense that which plays are you liking at this point in time, given the fact that cement is quite a regional sort of a, the players are divided regionally. So help us with your take on the cement counters.
No, so while I continue to like cement as being India's proxy to, let's say, the whole infra built out, and maybe the other tailwind is that now the pricing is also sort of seeing some kind of improvement, is what I understand. And the companies are able to maybe retain some of the price hikes, which was getting slightly challenging in the past. So I think that is also giving a positive sort of a view. Only thought has been that I think over this time the valuations have also moved up a bit. Hence, on valuations, one could be slightly cautious, but the long-term outlook tends to remain good. I think the companies out here will see sustainable growth opportunities. The profitability has scope for improvement because they have anyways gone through a very challenging phase of not being able to raise prices and cost being higher. Maybe if global slowdown leads to some of the commodity prices and the input cost being low, that should also help overall. So I think that's how, and like you mentioned, it's a more domestic oriented sector and hence not as much affected by what's happening, let's say, globally.
So, Vinit, if one is looking at, let's say, identifying pockets where you would say that growth is going to be above the nominal GDP, 14-15%, and valuations can see a 10-15% uptick in next 2 to 3 years. What could be that combination in this market where earnings could be reasonable but predictable, and there is scope for PE re-rating? Again, not massive but minor.
So, we were actually going through a lot of the businesses which were depicting this 14-15, and those actually now are seeming like coming down to 10-11. So I think overall the growth metrics have got revised down with the broader growth rate sort of coming down. But let me just try to share my thought process out there. I believe that there is a scope for, let's say, the consumer discretionary to sort of come back this year because of the fact that, as I mentioned, they should see the benefits of, let's say, savings from the tax benefits, and eventually the pay commissions hike and all those things will definitely come into picture. So those things should benefit that space, and maybe they have a capacity to see decent growth. While the valuations, particularly on the low walled earnings, are not very cheap as such. But I think still the business cycle should mean that they will sustain those high valuations is what I feel. Pharmaceutical is one space where I believe that the valuations are okay, and the growth trends should sustain. Within the healthcare, I think the hospitals and labs are on the expensive side, but they will sustain decent growth is what I feel. But the pharma companies are trading at reasonable valuations, and they could sustain reasonable growth. Well, they will have to again go through some bit of volatility as the tariffs clarity comes about. I mentioned about the specialty chemicals. There I see the growth trends actually coming back after being low for the last 3 to 4 years. So I think broadly these are the areas where I see the growth being, let's say, reasonable as such.
Having you on the show. Thank you so much for your time today.
Thank you.
Okay, 0.5% higher. So what looked like a quiet start has finally picked up some steam. We're about 24,560 on the Nifty futures. It's Bandhan Bank scaling up very smartly. Sona Comstar, Prestige, IGL. It's just a bunch of mid caps out there which are holding up. But the top mover today within the F&O band is PNB Housing. The stock is higher by almost 7%.
If you like this video, then like, share and subscribe to ET Now.